As we said, blended finance is a crucial mechanism for sustainable finance. But what exactly is it? Essentially, it is a powerful structuring approach, combining private and public capital to reshape development. The real magic happens with the techniques and interactions between the players, and this is where true innovation can happen. Blended finance hits about $20 billion per year. Even mainstream actors like BlackRock and JP Morgan are making big investments. This demonstrates blended finance's essential role and tremendous potential in mobilizing vast quantities of private sector capital needed to reach the Sustainable Development Goals, or SDGs. Certainly, other systemic shifts are needed, as we will discuss. Let's get to defining blended finance. There is no common definition, but let's take some examples. As you can see, Convergence describes blended finance as the use of catalytic capital from public or philanthropic sources to boost private sector investment in sustainable development. The OECD describes it as the strategic involvement of development finance to attract additional funds for SDGs in developing countries. And the DFI working group indicates that it's about combining concessional finance with the DFI's own account or commercial finance to promote private markets, SDGs, and private resource mobilization. Our working definition for this course brings these concepts together and highlights key terms for important reasons. Blended finance uses catalytic capital in innovative ways to increase private sector investment for development impact. While we unpack each of these terms in detail in the course, for now think of catalytic capital as funding that attracts additional investment by removing risks. Before going into these details, let's take a step back and look at how the blending happens and who the players are. Blended finance combines funds from the public sector, the not-for-profit sector, and the private sector. The public sector includes government-owned development agencies like the former USAID in the US, Global Affairs in Canada, and AFD in France. It also includes development finance institutions, or DFIs, such as the DFC in the US, FinDev in Canada, and Proparco in France. And it includes the multilateral development banks, or MDBs, such as the World Bank and African Development Bank. The not-for-profit sector includes, for example, CARE International and Rockefeller Foundation. The private sector includes entities like impact investors such as Mirova, corporates like Microsoft, institutional investors like Allianz, and banks like Citibank. Let's look at the development agency capital. It is highly concessional. As we said, this type of capital is provided at below market rates and might not even have to be repaid at all, like grants. It can absorb the highest risks. It involves things like official development assistance, or ODA, which we will discuss in detail. The DFIs and MDBs use what we will call risk-tolerant capital. These entities are also public sector, but they operate a bit differently as they do need to either make a profit or break even in their development activities. They bring vast networks and operate across the entire spectrum. And they bring financial sophistication and collaborate with different players with ease. They tend to enter earlier on deals or provide longer tenors or subordination, but still require financial viability. However, they don't have as much concessional capital as development agencies have. Now let's look at the not-for-profit sector. They have various capital types, some more concessional than others, like mission-related capital or program-related capital. They bring international networks, technical expertise, and fiduciary strength, which is important to funders, and we will return to this concept. Finally, the private sector requires commercial rates of return. They have vast international capacity, global contacts and relationships, and large funding sizes. This private sector capital is the funding that blended finance is trying to incentivize to come in, and a key focus of the course.